Hi, everybody. Welcome to today's conversation. My name is Michelle Avalos. I am the Director of Operations at Impact Hub Houston. You're joining us in the middle of the Houston Innovation Summit. This is the fourth year that we host this summit, and it's actually part of Global Entrepreneurship Week. If you've been participating in any of the events starting on Monday till today, and there's a couple more tomorrow, you've actually been able to help make a few different milestones for us in this summit. And so together we were able to make Texas the #1 state that is contributing and participating in Global Entrepreneurship Week. We were able to make Impact Hub Houston the #2 partner, and we were able to make our city, Houston, Texas, one of the top 3 cities that is participating in Global Entrepreneurship Week. So let's give that a little celebration moment. Today, we have with us Danelia Argueta of Fair Credit Union, and she's going to be talking to us a little bit about financial empowerment and entrepreneurship, and taking some time for us to really reflect on what are some of these good practices, good financial practices that we need to be starting to implement so that we can, while we're making our personal credit be credit worthy and helping us build our entrepreneurial ventures, spending that time focusing on our personal credit worthiness so that we can make our business also bankable. So Danelia, thank you so much for giving us a little bit of your time today. Thank you to you and Fair Federal Credit Union, and over to you.
Thank you. Thank you so much. I really appreciate you inviting me to be part of this. I enjoy being to come over and talk about financial education and literacy. It's a big component of who we are, and I've also been in entrepreneurship, and I've owned a few businesses. I failed in a few businesses, so I know what goes into that. So I'm excited to be here. So thank you so much for having me. Let me go ahead and share my screen. I have a presentation to share with everyone. Now, can you hear me just fine?
Yes, we can see you. Perfect.
Okay. Perfect. Okay, so we're going to be talking today about financial empowerment and entrepreneurship, specifically talking about building and rebuilding business credit. What does that look like? And what are some of the things that you need to do as you scale your business? And so we're going to go ahead and get started. So before that, I'd like to share a little bit about who I am. My name is Danelia Argueta, and I have over 20 years of experience in events, marketing, and business development. Began my career in the software industry. However, I've also worked in education industry. In nonprofit has been a huge component of my career. About 10 years of it, half of my career has been spent in nonprofit. And then now I've jumped into industry, which I absolutely love, specifically credit unions, which I'll share a little bit about why I really enjoy working with the credit union. With that, I'm also a certified money coach, and just that all happened this year since we had some events that were canceled. I figured, what can I do with my time? Well, here you go, I get certified. And so I also received the certification for a certified CUNA financial consultant, and CUNA is the Credit Union National Association, and they're the ones who really help credit unions stay on track. So with that, this information is to help me provide better content for the community, for the organizations that we serve. And so, which leads me to the next point. So we provide all the necessary tools for businesses and employees in order for them to have a successful financial journey. And the way that we do that is through our key employer group. It is a free program. Any business owner who has 5 employees or more, they can join this program and receive access to webinars, tools, courses, videos, anything that will help them in their financial journey. So if that's something that is of interest to you, please talk to me afterwards or send me an email, and I'll love to share more information. Y sí, hablo español. So one of the biggest components of the credit union is the Hispanic Initiative, which I also have the pleasure of leading that project. And so I handle all the Hispanic Initiative. And what we did last year in 2019, we became a Juntos Avanzamos credit union. And that designation is given to credit unions who are making a commitment to serve the Hispanic market and providing services in Spanish. So that includes our products and services as well as our website. So I'm here to help answer that information as well. If you know any organization that has employees that speak only Spanish, I can also provide financial literacy. Last but not least, I'm here to, conversation to have. Oftentimes everyone's shy about what's your credit score, or what are some of those mistakes that you've done, or perhaps what are some of the tools that are out there that you may not know. And I will say, I've been learning something new every single day. So I think the more you ask, the more you can grow. And so we're here to help you with that as well. And so about the credit union, we are a not-for-profit, member-owned financial institution, and our mission is to be a key partner in the financial journey. And as a credit union, we're a full-service financial institution, so we offer exactly the same thing that a bank will offer, but the only difference is that when you become a member, you're basically investing. You get a vote at the end of the year, and you get to vote in our board members. On top of that, like I said, we're not for profit, so we're not here to make a profit. Any amount that are left over at the end of the year are given back to our members in a form of dividends, as well as we do a lot for the community. So in 2013, we created an initiative, or the board and the executive team, called Community Only Better, and this initiative was to pledge $500,000 to give out in a span of 10 years to our community in different forms. And last year alone, we gave out about $360,000, and this was to either various nonprofit organizations, scholarships for high school students. Over $12,000 was given out in scholarship for high school students, and then of course helping the Cypher district. They're one of our largest and longest partner. Because in 1956, when the credit union began, it actually began with 10 teachers from Cypher ISD district. And so I can share a lot more about us, but that's a lot of what we do. Okay, so today's objective for the presentation is we're going to be talking about three things, which I think we'll incorporate at the end of this. We'll show you how to build and rebuild business credit. So first, we're going to focus on the power of personal numbers. What does that mean? And why is that tied to your business specifically? The power of your business numbers, what are those numbers and why are they important for you to know? And then of course, the power of your banking relationship. So I'll share those three information. And as we go along, if you have any questions, please, you can put them in the chat, or you can just ask the question at the end of each segment. We'll give some time so that you can ask questions as well. So we'll start out with the powers of numbers. And with that, according to just recently, the SBA, which is a Small Business Administration, announced that anyone with 20% or greater ownership stake of a company must also guaranteed personally that loan. So that means that if you own the company and you have 20% more ownership, or if there's anyone else in that company, so you have a partner that owns 20% as well, or 20% or more, if you go out to get a business loan, it will have to also be personally guaranteed. Now, not most financial institutions do this. That doesn't mean that all the financial institutions do. So providing a personal guarantee basically means that you become basically responsible. If you are unable to pay the debt, if the business, is unable to pay the debt, then the individual basically will have to assume responsibility for the balance. So with that being said, sorry, I have to move some things around here. So before you go out and get a loan, because now you're going to be responsible, it means it's going to go on your credit score. They're going to look at your credit report. Anything that happens with that loan is going to report back to you. So when you think about getting a business loan, the three things that I would, ask Del, and I think that it would be helpful, is to say, am I a partner? Are we ready for this business loan? So when we're looking at that personal guarantee, it also often means that there's going to be some collateral. They're going to want to, what are you willing to invest, which is my last point as well. So you're going to look at your situation, and you're going to look at where you stand in terms of your personal credit, your debt, where you're at, and ask yourself, am I ready for this? The second thing, is it the right time for the business loan? And so we're going to look at the economy. You're going to want to look at also your financial statement, what has been happening for the past however long you've been in business, to determine, okay, is this a good time for me to apply? Now, I would never discourage anyone from applying for a loan. If you want to apply, please definitely come in and apply. But I do want you to know exactly what it is that you're getting into, so that you can better prepare. And for the credit union in particular, if there's something that you don't qualify for, it is our job to educate you on what are the things that you can do, what are the steps that you can take in order for you to eventually qualify in the future. So we're going to do a really quick activity, and I'm not sure if I'll be able to see the chat. I'm curious to see. So I'm going to count to 3, but I want you to write anything just yet. What I want to know is, based on your current situation, okay, if you were to apply for a loan today, I want you to tell me what amount you asked for. Okay, I'm going to count to 3. Don't write it just yet. You're just going to, based on your situation and based what I just shared on the slide, what amount you will apply for. So 1, 2, 3. Michelle, you'll have to tell me the numbers because I can't see it.
Okay, I'm getting a couple of different numbers. So we have 50,000. Someone said 50,000.
Anyone else?
Someone said 25K.
I wanted to ask, because a lot of the times when we get individuals and we're talking with, we're asking them how much do they want, and oftentimes we do see people say, well, how much can you give us? Or we want $100,000 or some crazy number. And so I think when it comes to business loan, you definitely want to be, you want to know your numbers, because this is where, if you're just asking a random number and you go to a financial institution and you don't know why you're asking that number, and you're just giving a number because you think it's going to be free money, I want you to know that's not the case. So they want to know why you're asking for that $25,000 or that $50,000 or that $100,000, and you're basically going to create a case around why you need that amount, and you have to prove that your business is capable of paying that debt through the time period that it is going to take it out. With the powers of your personal numbers, we're looking at, again, your credit score. And so credit score, your credit report, and that normally ranges anywhere between 300 to 850 is the number. And anything above a 700 is generally good. Above 800 is excellent. But with the wheel, we're looking at 5 main factors that impact your personal credit score. Okay, so from this, I went ahead and I put together some tips to help you improve your credit score, just so that you can look at your financial situation as it is. And so the first thing is, of course, 35% is based on your payment history. So in order for you to see, okay, are my history corrected on my report? Are they, the people that said that they should have been reporting, are they reporting? You want to make sure that you're checking for that. So pull your credit report at least once a year. You can pull it for free through annualcreditreport.com. And so when you get this information, this is the only real true free, because some places say it's free and then they'll charge you afterwards. But it's really important that you look at your payment history, that you're looking at your credit report. And then, of course, because the payment history, 35%, you want to make sure that you're making your payments on time. So that's really important in order to make sure that your credit stays in a good high number. The third tip is reduce your debt and increase your income. So again, 30% of what we're looking at is it's going to be the current loan and the current credit card debt. And so any TI that's higher than 40% will raise red flags for financial institutions. Okay, so there's a little, I kind of stay within the really 30%, I stay in that amount. And the same thing goes, for example, if you have a credit card and you have $1,000 balance in that credit card, you do not want to use more than 30% of that. So that will be $300 if you have a $1,000 credit card. If you go anywhere above $300, you start getting closer to 500 and 50%, 60, 70, 80%. Now it looks like you're not very responsible with your credit. Okay, so this is an example of how the financial institution is looking at your history and your current loan to debt. And that's basically what we're looking at when we're making a deciding factor on your loan. When it comes to credit cards, we're looking at 15% of it as the length of credit history. Okay, so that means that when you pay off your credit card, first of all, great job if you do that. That's fantastic. It's it does take a while for people to do that, but if you do, it's very important that you do not close your credit cards. Okay, because you still want to make sure that you have that history. If you close your credit card, then there's no history with that card, and it looks like you just don't have any credit. And then 10% of it is a type of credit. So with that, we're going to suggest or recommend that you diversify your type of credit. That means that you want to have credit cards, you want to have personal loans, you want to have a mortgage, you want to have auto loans. These are the different ways to diversify your credit. If you have, for example, just 20 cards, 20 credit cards, that will send up a huge red flag to any financial institution, because they're going to say this person's just going out in need of credit, and that's the way that they're living their life. And so not that anyone in this room has that, but again, this is why you want to diversify this to help you. And I can do a whole webinar on this, but this is just giving you a few points.
May I
sure.
interject just really quickly, Danelia? One of the things I wanted to note in what you just shared is that you hear this breakout all the time about the things that impact your credit, but actually this is the first time I'm seeing a breakout of the weight, like the weighted percentages of what will impact your credit more than others. So thank you for sharing that. I think we all get a little bit confused with that sometimes, and your breakout. We do have a question in the chat that perhaps either if you want to answer it here or if you want to answer it in the next section that you're going to. But there's a couple of questions around what is the longest term for a business loan, and is the loan for a business loan, is it based on your personal income or the business income, or both? And then a couple of more questions about the rates of the business loans right now, et cetera. So is that something you want to answer now, or do you want to go to the next section first?
Sorry, I kind of lost you on the second question. I heard the first one that it was when you're applying for a business loan, it's based on your personal income. So like I said, if it's personal guaranteed, then yes, we're going to be looking at the business revenue, but we're also going to be looking at the personal revenue, and we're going to be looking at all the decisions that owner who owns 20% or more is doing. So their credit report, all of what I'm sharing right now in terms of the credit score, we're going to be looking at all of those decisions. In addition to, most businesses, if they have less than 2 years in business, they probably have not established business credit. I will talk a little bit more about business credit and what that looks like. So for the most part, we're going to be focusing a huge percentage of it is going to be focused on the personal numbers. Does that answer that? What was the second question?
I think it goes to the next section that you're going to. It's more specific questions around business loans and what currently is one of the lowest rates for a business loan.
Okay, I will, and those are all good questions. I think, again, when it comes to what the rates are and anything like that on each applicant, and so I would recommend that the person goes and applies when they're ready to see where they stand, because it's not, I can't quote any actual credit, what's the lowest percentage in terms of the loan. But so we're going to get into the business part of it. So when we're looking at the loan, when you're submitting the paperwork, so I just mentioned the personal part. When you're submitting your documentation, we're going to look at the financial statements. And so the power of your business numbers, again, these are 3 financial statements that are really important. And having A very good understanding of your business financial reports can help in times when you're speaking with the lender and when you're trying to ask for either a line of credit or just, again, a business loan. And the reason is because when you're with these numbers, we want to know how well you know your information and your business. And so do not rely just on your accountant or your bookkeeper or whoever manages your finances. You don't want to rely just on them. You want to make sure that you understand, are you being profitable? You know, does your business have cash flow? And I'm not going to go into each of these specific ones, but I just want you to know that these three are the ones that are really important. And they're basically showing a history of your business. So we're going to look at that. And oftentimes we're also going to look at projections as well when you're having to submit for a loan. So you're going to want to also have a record of your projections as well as a business plan with the loan. Okay, so when we get into the actual building business credit, so Pandix score interpretation, the Pandix score is basically equivalent to the FICO score rating. So the same thing that we talked about for the personal side, this is basically the business side. And many suppliers, banks, and customers are they're looking at this number, and the range for this number is between 0 to 100, which is the other one went to over 800, but this is for the business is low risk. It's 80 to 100 is actually low risk. 0 to 49 is actually high risk. High risk business. And basically the way that this is measured is the two biggest component is one, are you paying your bills on time or ahead of time? And are you also paying your suppliers and lenders on time? And then making sure that those lenders are reporting your information to the Dun and Bradstreet, which I'll talk a little bit more about them in a little bit because they're the ones who do the business reporting. So here's a few things that you can do. There's 7 steps that you can do to build and rebuild your credit. So to go into a loan, to go and try to acquire a business loan, again, all of the components that are mentioning are going to be extremely important. So when you come in, it's going to be a really long application, and you're going to have business plan. You're going to have your financial statements. You have to know what are your projections. You're going to want to show that your bank statements is part of what you're going to be showing. You're also going to provide your credit. We're going to pull your credit report, but you're also going to provide your finances and anything that is necessary in order for us to proceed with the loan. But for you, as you're building your business credit, you want to do these things. You want to put your business on the map. So that's really important. Actual entity, not just as your personal name. Maintain good credit, like I said, with the suppliers and the vendors. Obtain an employer identification number. So this will separate your Social Security, and your business will have like a service provided by the IRS. You can open a business credit card. So here's where you can start establishing some business through getting a business credit card. So your business name will be on that card. And then again, it will start establishing some credit. It will still be it may still be a personal guarantee, but now it's going to have the business name as opposed to your name on it. Get incorporated or an LLC if you're a sole proprietor and you're at the point where you're like, okay, I would like to separate my personal, business venture and make this an actual incorporated a company. Then getting incorporated in an LLC again is being registered with the state, and it would allow that entity to kind of live on separated from you. Again, we're still very likely still going to use your personal guarantee, your personal information, but now your business starts to build credit. Separate business and personal expenses. Really important that you have your bank account completely separate. And when we went through the PPP loans just these past 3 months, A lot of individuals that came to us had their accounts going straight to their personal business, to their personal accounts. So they had their revenue, their expenses, everything was running through their own personal account. And that is, we can still use that, but it's in terms of if you're really trying to build credit for your business, then it's important that you establish that through by building a different account. And then of course, monitor your credit. And so that brings us to the next step, which is basically, how do you do that? You go through Dun that handles this for business owners. And then of course, they're the ones that report it. So financial institutions and any other agency that needs this information will go to them. So what you can do is register your number. You can register your business. First, you want to look up your business to see if it's already there. Sometimes if you have an LLC, if you have a corporation, and this is why I was saying it was important, it may automatically create a number for you. Now, this is not the same as your EIN number. This is a different number. And when it creates a number for you, it's going to track basically your history, your payment history. It's going to track, how are you working with your vendors, suppliers, and how responsible you're being. What you can do is if you don't have it, when you look it up, then you can ask to create a number. It is completely free and it can be done in 30 days. Once you establish your business, you can then log in through their own system. They have different products and services where you can then pull your business report, and then you can update any information that is inaccurate to make sure that your business has all the information that it needs. And with time, just like your personal credit, with time, this information will become more sustainable. Have any questions?
I have a quick question, actually. So, and I'm sorry if I missed this. You might have already said it. So we were talking about, especially looking now at this site and this process and how this works, and we're talking about adding your business on there and all that. So does that mean in order for you to actually be able to build business credit, your business should be actually registered as an LLC? Or how do the side gigs work? The ones that you've been building and selling and you have income coming in, but you haven't registered as a business. How does that work?
If you have not registered, technically you're as a sole proprietor, you are still a sole proprietor is really you and it's your personal business, right? But it's really just you utilizing a DBA. And so you're doing business as. So all that does is, yes, it registers a DBA, but it does not necessarily separate your personal finances or your personal funds or your personal revenue or expenses from your business. And so when it comes to separating the two, and I'm not going to say you should. I mean, I think you need to talk to either your accountant or ask for someone who can help you. What would be the best if you should be an LLC or get incorporated. But into building credit for the business, yes, it would be important because this is how they would identify you as an actual separated standing business from your personal.
Yes, and then actually had a follow-up, not a follow-up, but another one that was on the chat earlier and I missed it. But if you have a nonprofit, right? And so then the nonprofit is you're operating, it's business, it's just a nonprofit, right? But it doesn't technically have owners. So then how do you develop how do nonprofits develop business credit? How does that work? Because I know there's a lot of folks too that have initiatives yeah, go ahead.
Right. That's a great question. The nonprofits they still have to register with the state in order for them to become a corporation, basically, in essence. And then they have to, they can, submit the corporation as a nonprofit. So that already registers. However, when they register with the state, there is going to be the founders or the, executive director. There is going to be someone who is responsible basically for the business. So normally in a nonprofit, it would be the board. So the board is the one that executes. So the chairman of the board may be the one that would be listed on the nonprofit. And it's just funny that you asked that, because we did have somebody who applied for the PPP loan, and it was pretty much the same. Her personal information. Again, it's not necessarily that we're just looking at who's going to be responsible for this. Should the no one can pay the loan back, right? So that's really what we're trying to see, is who's going to be responsible for the loan. So it really would work the same way. And because the nonprofit is a corporation, technically they can also get a DUNS number and build credit that way. So it will really work pretty much the same way. Okay. All right. So the power of banking relationships. And so I'm almost getting to the end here. So the thing with credit union difference, I mentioned a little bit earlier that we're not for profit, we're owned. And then for us is really about, doing the best that we can to serve the community. The funds that go into our financial institution are basically for us to do better, for us to serve the underserved individuals that oftentimes are not getting maybe help them build that credit, build the understanding, the knowledge, so that they can succeed. So we want people to succeed personally and, of course, with their business ventures. So your financial institution is your new friend. And similar to when you go ask for a friend, if you want to ask them for $100, you're probably not going to ask somebody that you don't know, right? If you met someone yesterday, you're not just going to go to them and say, hey, can you give me $100 or can I borrow $100? It's going to feel weird. And the same thing happens a little bit with financial institutions. So when you have a relationship with your financial institution, so that means you're also depositing your money there. Maybe you're getting your car loans with them. Maybe you're getting your mortgages. You're creating basically a history of your responsibility as your financial responsibility. And so we're able to see what you've done. And so if for whatever reason, one year like this year, that happened to be a really rough year for everyone, if you came to us and you said, hey, I'm having a real hard time, this is what's happening with me. When you have a relationship with the credit union, I can't say we can give money out and promise, that all the loans will be approved. But certainly having that history with the credit union makes a big difference, because now we can say, I know Michelle, she comes here every, week, her business has been doing great, and this is how can we help her, move along. We may not be able to do a huge loan, but we can definitely support you during that time when you're building a relationship with the credit union or your financial institution. And again, you do that as well by the tracking of you creating a history with your deposits and so forth. So make sure that you also have good history with your deposits. So don't write checks that cannot be cashable. Do you have a question?
I was going to note one thing, and again, if you guys have any questions, please drop them in the chat. But one of the things I love about this way that you worded the slide, banking relationship, like a lot of people don't think about the bank, or any banking financial institution as a relationship. And it really is that, because even in the upper, the early stages, you're like dating, right? So you're trying to figure out, well, which one's the right one for me? And then especially if you're an entrepreneur, then you're looking for which is the right one for me in my business, and who's the right person that I'm also going to interact with on top of the right organization. And so it's totally spot on.
Yeah, no, for sure. And I didn't, even for myself, before I started working here and I joined, joined the financial institution industry, I didn't really see it that way either. I thought, well, I could just go wherever I want. But the truth is that whoever we're banking with, we're creating a complete history of our of our own finances and how we're managing that funds. And so when you're creating that history, they can look at that and say, okay, this person, and oftentimes financial institutions do. That's how come you get those cards in the mail, like you're pre-approved. You can go ahead and buy a car, is because we're looking at, hey, this person this is their credit score, this is what's happening, and we're looking at all of that. But so beside from the money side and how you manage your funds, it's also coming in, just having a relationship with someone in the credit union or, again, financial institution, and saying, hey, I bank with you guys. What do you do for the community? How are you guys involved? I want to be part of what, with especially credit unions, we're really engaged with the community, so you can do this as well. This is your lending options. And so, like I said, it comes to loan. A lot of the times, you may come in and say, I want a business loan. And after we review the application, we may say, you know what, maybe a personal loan will be better. A personal loan, it is a lot easier to, in terms of what requirements for a personal loan than a business loan. And simply because a business loan, like I said, you're going to have a business plan. You're going to have a lot of details involved, your financial statement, projections. There's a lot of things that you'll need to have ready before you can apply for the business loan. I do have, and I can email, if you're interested, here's my email address, and I can email anyone who's attending here an actual business loan packet, which includes business loan checklist. And this is going to show you everything you will need in order for you to apply for a typical business loan. And most financial institutions are going to ask for all of these documents anyway. So this will show you what that needs. When it comes to the amount that you qualify for, what is the rate, all of that is going to be dependent on the applications. There's nothing I can't really state or say. You would have to come in and apply in order for us to determine what is the best option. If you don't qualify, then again, we can go back to, you can either consider doing a personal loan, or, sometimes there's home equity, there's a home equity loan that you can also use. But I will caution you to, before you do that, to really consider and ask the 3 questions that I asked, that I put at the beginning of the presentation. Are you ready for this? Is this really the right time? And especially if you're putting in own collateral into this loan, because if your business fails, then that is going to impact you personally. And so we don't want that to happen to you. We want to make sure that before we approve anything, that we're doing right by you as our member. Do you have any questions?
So right now we're just getting a lot of thank yous, especially that you will be sharing that resource. And will participants also have an opportunity to, we'll be able to share the presentation itself as well with them?
Yeah, I mean, the biggest thing, like I mentioned from the presentation, is especially when you're a startup, if you're in business less than 2 years, you want to look at your personal history, your personal credit. Especially like SBA would not guarantee anything that his business has been in business less than 2 years. And so that shows you right there that we really are looking for a business that's been in business for 2 years or more. And again, the history with your finances have to be, you have to have some cash flow, you're making revenue, your debt cannot be so high where you're, borrow a lot. Those are the different things that we're going to be looking at. So I hope that makes sense. And for the different areas that I mentioned there, I can do a whole deeper dive into them, but for the purpose of this presentation, I wanted to give as much as I can. So hopefully I answered everyone's question.
Thank you so much, Danelia. I really love the way that you put everything out into perspective. And I mean, what are a lot of the pieces that you're also sharing? It seems like as an entrepreneur, you're kind of juggling a lot of things, making sure things are balanced correctly. And what's some suggestions or some pieces of advice on how to really manage that? Because even earlier you talked about how if we're working with you have your bookkeeper or you have an accountant that's helping you with the numbers, but you made it a point to say that you, as the owner of the business, should still know what's going on. You just don't know your cash flow and all those pieces. So what's some parting advice, I guess, for entrepreneurs, especially small ones with small teams, to
Right.
juggle all that?
Yes, I know. I mean, I know it could be difficult, right? Because when you go into business, maybe you wanted to be a hairdresser. You never considered I have to also be an accountant and I have to be a marketer and I have to do all these things. So it is a lot for a business owner to do. And that is the challenge for entrepreneurs. And part of the encouragement and I guess the empowerment, right, that I want to share is just that take baby steps. You're going to take one step at a time. You don't have to have it all figured out. Look at for the, make sure that you look for the resources in the community. So we have, Impact Hub Houston, there's Baker Ripley, there's a lot of other organizations that are willing to share a lot of this information for free. SCORE, for example, can also sit down and help individuals, go over their books if they need to. But it is going to take time, so you don't have to have it all figured out today. But it is a good idea for you to start taking those steps, especially if you do, maybe you're not going to get a business loan today, but if you're thinking, okay, in the next 2 years, 3 years, I would like to get a business loan. What do I need to do to get my business in that good position to be bankable, right? This is what we were talking about today. What do I need to do? And so part of that is just, okay, let me every month look at what does my balance sheet look like? What does my cash flow look like? What does my financial reporting? All of that so that you can see, are you in a good position? And does it make sense in terms of the business growth? And are you going in the right direction? So those things are important. And like I said, we're here to help you as well. So if you have any questions and you're like, hey, I really want to know this, you can reach out to me. I'm the one who, again, handles all of the community type of initiatives. And I will love to send you an article. I'll send you whatever information you need to help you through this journey. So that's what I'm here for.
Thank you. And I'd love to end it with one other question too. Why do you do this work? Why are you passionate about this?
Why am I passionate about it? Oh, goodness. So, like I said, half of my career has been spent working with nonprofits, working with, really supporting women and children, empowering individuals to live with purpose as well. So, for me personally, when this position opened up and I thought, wow, financial institution, I've never worked for one before, but when I saw the credit union difference and what they do for the community, it really resonated with me because it also matched my personal mission in life. And so for me, specifically growing up with parents who were immigrants, coming to this country with very little, we had, just there was not a lot. And so with 6 daughters, um, financial education was never taught to my parents. It was never taught to me, and specifically there were little things that I knew, but surely not enough. And so when I saw that the credit union is doing this for the community, I thought, this is exactly what people need. People of all walks of life need to know this information because it's not oftentimes shared in schools, is not oftentimes being taught, by our parents. And so we're here for that because we want to make that difference. And the credit union's philosophy started with people helping people back in the, I want to say, 50s or 60s. But it really began because there were individuals that were not getting approved for loans. And there was the only way to get loans where you had to have either a lot of money, you have to be known by a big high society. And it was very difficult for individuals that either were immigrants or underserved market. They came to this country, they had no way to really grow a business or do anything. So for me personally, to be able to do that for our community, it means the world.
That's awesome. Thank you so much, Danelia, for your time, for your words of advice, for your inspiration. And it's super important to be able to connect with the people that you're going to be working with at all levels. And so it's wonderful to hear that you are truly passionate about the work that you're doing and supporting entrepreneurs and diverse entrepreneurs as well. So thank you so much. And for everybody else, thank you all for joining the Houston Innovation Summit. We still have a few more events for today, and we have a few more events tomorrow, and then we will wrap up Global Entrepreneurship Week. We're wishing you all the best from Impact Hub Houston and Cy-Fair Federal Credit Union. Thank you so much for listening to today's presentations, and have an amazing rest of your afternoons.
Thank you so much. Have a good one. Bye.
Bye.